What's going on, guys? Welcome back to the channel. Meathead Money here today, and we're going to be talking about NIO. NIO. Oh boy, big issues with NIO. So at that, let's get right into it here. Okay, so if we look at the 5-day chart for NIO, we can see that we started up right around just shy of $5. And we are definitely following this 15-day support line, and now we are currently around 400 or $4.50 a share. Not very great support down here at this level. There's a little bit. It touched it once, a little under 450, came back up, and now we're kind of sitting at this $4.50 here. A lot of this was driven based on some news that came out this week. Go through a couple articles with you. One that's a little more optimistic, one that's a little more pessimistic. And then just if we take a little shot back here, look at the 1 year, we can see there was some good support around $7, and we are now below that support level. So that's now going to be resistance. This $6.30 level is pretty heavy resistance right now. We did have that support right around that $5.20 range. And now we are again below that, which is not good. We're at this $4.50 here. So assuming, we can maybe hold at 450, you might be able to see it kind of bounce between, this $4.50 range and maybe this $6 range. We'll have to see what happens here. We'll go through some of the financials, not really looking that great. We got a couple other negative issues working against us here too. So you can see we've got our 200-day moving average. So back July of last year, we can see here that we had actually a golden cross. So this is a little more optimistic here, actually, where this is very, very heavy and a nice, bullish trend, which we did see. That's when we got that big, close to $16 hike. Everyone was kind of all, yeah, NIO to the moon. And then, we started downtrending. And as you can see here, our 15-day crossed again with our 200, which is actually the death cross. So complete opposite of what we had back in July. And now we can see that, our 15-day is below this 200-day moving average, which is heavy indication that this is a very, very strong bear trending stock right now. You've got your 15-day moving average that seems to be kind of tracking more or less. And, your 50-day moving average, that's acting as resistance, your 100-day and then your 200-day all acting as resistance right now. So NIO's going to have, at least from a technical standpoint, a lot of work to do to kind of get back up here, but we'll see what happens. The other issue, I guess, is that with this being under $5, stipulations for trading is a little more stringent. So under this $5 level, NIO's going to have to really start performing here to get this thing back above $5. But this becomes more of a riskier stock now under this $5 range. So this is now technically a penny stock. Anything under $5 is considered penny stock. So we are now back in the penny stock limits here. So at that, let's jump into some articles. So this is the first article here. These are both from Seeking Alpha. The authors are up here, or I guess this author is named here, Bodon. And he was originally at a sell. He had moved this now to a hold. So you see rating upgrade. He's still really looking at a hold. And again, once we get into this, he's really pessimistic. So he doesn't really see this as a very good long-term investment. But let's jump into this here. So some of his points, reason basically why NIO is not doing so well is that they've got basically there's ongoing price war within the electric vehicle industry as a whole, and NIO is burning through cash like crazy right now. So their debts are a lot higher than what they're getting in return right now for revenues. So obviously not what you want to see. Some positives here. So NIO did manage to actually increase its revenues from 6.5% year over year, which would be about 2.41 billion in Q4. Now, issue with this is that their earnings per average diluted shares that dropped to about negative 0.39, which was below an estimate by about 7 cents, which isn't good. And then on top of that, deliveries had decreased roughly 10%, 9.7%, quarter to 50,000 vehicles. Again, not the most positive. Their cash reserves, if you see it in their statements, they did reserve or increase from 3.8 billion to 5.3 billion and then 7 billion quarter four. Um, but the issue with that is that the share count also increased. So really what they're doing is they're diluting shares. So they're putting more shares back in the market, having people buy the shares. And that's how they're, basically getting some of this extra capital. As an issue with, as a shareholder, it's diluting our shares. So that's never a good thing from a shareholder standpoint. Plus, again, they're basically just getting money from people buying into the stock at this point. So this is, again, it's diluting existing shares to raise funds. And then operating loss was close to about $1 billion in quarter three and quarter two, with operating loss 663 million and 833 or yeah, $837 million, respectively, both Q3 and Q2. Again, not positive. Some of the other issues that you're dealing with. So NIO's been trying to break into this European market, kind of expand their customer base. They did only sell roughly 742 vehicles in Europe in quarter four. Now, as of quarter one, they've sold 308 vehicles, but they're having issues because one, NIO doesn't have any set manufacturing in Europe. So they're kind of dealing with like shipping wars, shipping prices. That's making them a little less competitive. And then if there's disruptions trading between Europe and China, that's also causing issues with getting vehicles in and out of Europe. So that's this other point down here is that there's this trade war going on potentially between Europe and China, which is going to make it more difficult for NIO to sell and get vehicles into Europe. So a couple issues there. Definitely, if you look at it on the flip side, I mean, there is positivity in that NIO does have the possibility to widen their customer base. So that's always a possibility. And they are trying to branch into that. So at least they're looking into it. That's good. But again, not the most positive at the moment. Dive into this just a little bit further. So really, in summary here, they've got this ongoing price war. Margins are being suppressed because of this price war. Some of their competitors are bringing down their profits per vehicle down. So every vehicle they sell is now less profit overall, which obviously is bringing less revenues. And with their increasing debt, it's a lose-lose battle right now. So that's kind of his thoughts on that, his take. I'm gonna go to another article here. Jump to the page here. Okay. So I believe his name is Giannis. Either way, so he's kind of more thinking this as a dollar cost average play. He's at a buy rating, and this was back in March 19th, so somewhat recent. The other one was as of March 30th, so that was a little more recent as well. So if we keep going through here, investment thesis. So basically, this gentleman's target is dollar cost averaging, between the $6.10 and $4.33 or 35 cent target range, which jump to the chart, we are well within that. So we're definitely below the $6. And really the next support we'll be hitting is a $7 range. So anywhere between 7 and he's thinking, this 434, which again, I think if we break this 450 range, we're going to keep seeing this downtrending, but I'll have to keep a eye on news, see how things move here with upcoming earnings statements. So again, he's coming back with buy rating. Some positives here. So again, kind of in comparison to the other article, which I think is good to keep in mind here. So again, these numbers are relatively similar. So NIO achieved about 2.2 billion in vehicle sales in quarter four of 2023, which is 4.6% year-over-year increase, driven by higher demand for vehicle volume, which is good. And then their average selling price stood at around $43,000 this quarter, and compared to $53,000 about a year ago. So from the last article, they were talking about margin profits shrinking. That's essentially what this is for. So NIO is being forced to lower the overall cost of the vehicle to compete with some of their competitors, and then also it's a double-edged sword. Their profit margin, so going from like say 20%, now they're cutting it down to like 10%, or in this case, actually it's 11%. That's driving their overall profits down. Another positive is that NIO did gain more traction in selling SUVs. So that's kind of one of their focuses now coming up this quarter and into the 2024 year, is tapping into this SUV market. So they've got 67% of the vehicles sold this quarter were SUVs, compared to 52% last year. So about 15% increase, which is good. And then again, the vehicle margin here is 11.9%. With the SUVs, which is a little better in comparison to the vehicles, or the cars, I should say. The revenue grew at about 12.9% year over year, 7.8 billion, and that again was mainly in growth of their sedan vehicles. But however, in this basically towards the end of 2023, overall vehicle margins fell to 9.9% opposed to like 12%. And then part of that they're basically stating is that's due to increased battery cost, and then also again with having to reduce margins per year. So we can see here kind of the trends of their average selling prices. So start out around 56,000 back, quarter one of 2022, and now here we are about $10,000 less with a smaller gross profit margin, last quarter of 2023. So again, not the best, but again, they gotta have to compete with some of their competitors. That's kind of what they're forced to do with some aspects. So first quarter, when this first came out, their initial forecasting was that they were going to deliver roughly 31,000 to 33,000 vehicles as of the 27th of March. So last week, they actually reforecasted that to around $30,000 or 30,000 vehicles as a delivery forecast. So that was part of this big drop here into the later part of the week. So if we just go back to, let's go to 10-day chart here. So we can see, this big push down here was due to that news. So that dropped it quite a bit, which isn't good, but that was the news that came out. Secondly, NIO delivered 18,000 cars in the first 2 months of Q4 versus 20,000 in Q4 of 2023. So it's roughly 12% year over year. And then they're, I guess in part of that, they're stating that part of the reason for some of the vehicle decline is that during the beginning part of the year, it's like a Chinese seasonal holiday. So it's their Lunar New Year, in which case a lot of their people leave the cities, leave the homes, spending time with their families and such, to celebrate the Lunar New Year. And so due to that, they could see a slower start of this first half of the year, in which they could potentially capitalize in the later part after the holiday is over. But so that could be in part to why this was a little lower. They could just be to doing this a little early, take the hit on some of the stock, and that maybe come out and actually overbeat it when they come back into earnings, which I think is probably more or less the issue, or their thinking process is that they're going to undersell it now and then hopefully come back in and beat it and kind of get closer within this range. But we'll see. It has been looking good. Obviously, their sales are down as of now, so we'll have to see what happens. And then management forecasts revenue to be between roughly about 1.5 million in the first quarter, which would be about call it 2% growth year over year. And then they maintain vehicle guidance of 15-18% for 2024. So that's positive. Some of the other things too. So this is in comparison directly pretty much with Tesla in the Chinese market, that they're trying to come up with these couple other brands to basically compete directly with Tesla in the sedan world here. So one being the Alps and the other one being the Firefly, targeting around that $37,000 to $55,000 target range, which is in line with Tesla. And then the other positive thing that makes NIO just a little different from some of the other their competitors, which has been a big talk, is their swapping stations. So their whole, theory is that, they can get these batteries, swap them out to help customers reduce time charging and offer this service, and, obviously get revenue on that side of it too, aside from selling cars. So part of that, they're looking to open up about 1,000 of these swapping stations, which obviously is going to probably create more debt coming up here, which we really don't want to see. But with construction costs and their capex, they're estimating a pretty large number here, which 592 million. That's going to hit their debt, so it's again overall profit margins are going to take a hit again this year. But however, if they can't expand this out, might take a few years to kind of start capitalizing on this. But again, just something to look out for as we move on. And aside from that, that was really it from this article that saw value. And I guess the other point I wanted to look out to here is that everyone talks about NIO and how NIO is doing so poorly. But I would like to also show kind of side by side with some of their competitors. So NIO here, obviously down roughly 57%. This is a year over year chart here. So yeah, it's basically a 1 year chart. So we're down 56 from a year ago. Tesla, we're down 9%. Thing with Tesla, I guess, is that we're looking basically from this high here. So if you had bought in at the dip, you'd actually be up a little bit this year. But however, same thing with Tesla. Had the peak, came down, and we're in a downtrend. And again, you can see kind of we had a golden cross, we had a nice uptrend, bullish trend, and then now we're in the death cross here. Consistent with NIO, golden cross here, death cross here, again, showing very bearish. Lee is probably the only auto company right now that's actually up and actually doing decent. So that's that's good for them. And then the other one is Rivian. Again, they're down pretty significantly too, closer to that 20 to 30%. And the thing is that, I mean, if you follow these trends, I'm going to bring up another chart here. Let's go to, so if we go to NIO here, we go to comparison. So you can actually see here. So this is Li Auto, Rivian Auto, NIO, and then Tesla all on this chart. You can kind of see that really a lot of these trends are very similar. They kind of follow Tesla. I mean, it's no secret. Tesla's kind of the one in the game here that's doing it the best. They're taking a hit, and so as this EV news comes out, and especially when Tesla takes big hits, a lot of these other companies are taking big hits too. So it's really not like a NIO problem. It's really overall electric vehicle problem. Like I said, Lee is really the only company right now that's actually doing fairly decent. They've kept a pretty steady trend, but otherwise you can see all these other ones are down, which isn't good. So just throwing that out there. That we keep hearing, at least I hear that, how awful Neil's doing and horrible company, get out, get out. But, there's these other companies out here that are in the same boat. So realistically, if you like NIO, it could be a good buying opportunity. I do have a small position in NIO right now. And I've been, basically hedging. So as we're in a downtrend, I'm hedging right now to make money on the downside and also selling puts to, dollar cost average as well as we, come down here. I'm definitely not up in this $16 range or, when NIO first came out. So I'm not bag holding here by any means. However, I am looking to, possibly get closer to a little lower price range on here. If we go back, let's just jump to max of NIO here. So this first started around $2. We're getting close here. Again, support was over here. We're at $4.50 range. So even this $3 range has pretty decent support. We go jump again at about $1.50. I mean, I don't really see it going any more than $1.50. I don't see the company just completely abolishing. I think it's going to stay around just because the Chinese market has, backed this thing up quite a bit, stuck some money into it. They've got the battery swapping side of the company, and then they've got the car side of it, which, they're trying to get their margins in line, trying to get competitive with um, some of their other competitors. And I mean, they have nice vehicles, from what people say about them. They've got decent comments. So we'll just have to see what happens. But just want to give you a little food for thought there. By any means, I'm not telling you to buy the stock. I don't say it's a good opportunity. Do your own research. Um, and we'll see what happens here. We'll keep tracking this, and we'll catch you on the next video, guys.